Hello and welcome everybody. I'm Stephen and I'm a popular investor on eToro. I really want to thank everybody for listening to this video today, and as usual, don't forget to please like this video, take a moment to like this video and subscribe to my channel. That would be really appreciated. So I'm sorry that I didn't do a video last week, but I'm back to normal service now. And today I'm going to be talking about what happened in the markets last week. And I'm also going to be explaining about how our portfolio fared overall and some main market news. So last week, our portfolio had a very strong performance. Our portfolio was up about 5.6%. If we compare that to the other benchmarks, the Nasdaq was up about 2.1% for last week, and the S&P 500 was up about 1.1%. If we compare that as well to Bitcoin, which we have quite a lot in our portfolio, that was up about 6.19 last week. So it was quite a good week for crypto. So just to summarize, I think last week was a very strong week for both the US markets, the Europe markets, and especially the China market. And it had a very strong bounce back, which I will talk about later in the video. We also saw some good gains from both Bitcoin and some of the altcoins in our portfolio who showed good signs of recovery after the FTX problem. And then also we did a lot of short-term positions last week. We had short-term positions and success in 𝗳𝗯𝗃𝗶𝗀, which is the South Africa and Japanese trading pair, as well as Petrofac. We had a short trade in Doge, which was successful. The US dollar 𝗁𝗃𝗃𝗀, which is the Swedish krona, Zim shipping, natural gas, and we also had a short in Manchester United shares. We also closed last week some longer term positions, and I just wanted to talk to you about that. So we closed positions in both Mondelez, which were anywhere from 16 to 25% in different positions, as well as Hartford Financial, which was between kind of 47 to 53% profit, and Raytheon, which was at a profit of about 47 to 53%. So what I want to say that is it's not any drastic change in the strategy of the portfolio. It's just that these positions had run its course and the theses had run its course. So, for example, Hartford Financial, as I took this position when I found out and when there was a lot of buzz in the market that the Federal Reserve were planning to tighten, do fiscal tightening and increase the interest rates. And this is quite a good scenario for financial organizations. So I took a position in for Hartford Financial, and I think now as we're starting to think about reducing the speed and the pace of the interest rate rises, I think now was a good time to book in some significant profit. Also, the same with Raytheon. I took a position right at the beginning of the rumblings before the Russia and Ukraine war. And I took a position in Raytheon. I thought that they would do well over that corresponding year, which they have done really well. And now, although the Ukraine-Russia conflict is sadly continuing, I think that it's a good time now to take profits on those positions. So right now, I do have a little bit more cash than usual in our portfolio, and I'm going to use that slowly and reinvest it when I think that the time is right to reinvest it. So please bear with me if we have a little bit more cash in the portfolio than usual. If we look at our performance for 2022 so far, our portfolio is down about 33.46%. And if we compare that to the Nasdaq, which is down about 26%, the S&P 500, which is down about 14%, And then we look at Bitcoin and other cryptocurrencies, which Bitcoin's down 62%, and many other altcoins are down kind of between 80 and 95%. Although our portfolio is slightly lagging the other key benchmarks, I think because our portfolio has a decent amount of crypto in our portfolio, and we also have different stocks from around the world, I think that our performance, although it hasn't been astonishing, has actually held up. I think our portfolio has held up reasonably well, and it's important to note that although we are down for this year, that we have a lot more upside potential than some of those indices, albeit with a lot more volatility. So I expect that we're going to have a really good bounce back in 2023. Our portfolio had done really well the previous 2 years, and although that this has been a year where interest rate rises have continued, there has been issues with the war, there's been all sorts of issues with the financial markets this year. So I think most portfolios are down this year, and I think our portfolio has kind of weathered the storm considering the assets that we have in our portfolio and the future upside that we have. So thanks for staying patient. As we move on to the main news for last week, as I mentioned, the US stocks rallied, and that was mainly because there was a speech by Jerome Powell last week, and as part of his speech, obviously he continued with the usual narrative that there's a long way to go, and that inflation could last for longer, etc. He did make a comment in that speech which made the markets rally and gave some positive sentiment, and that was that the Fed could slow down the pace of interest rate hikes as early as the next FOMC meeting. So this was seen as very positive, and this obviously means that it has been discussed previously, and that in the December meeting there is a possibility that we could see a slowdown of those interest rate rises to possibly 50 basis points, 0.5%. So the likelihood of that has increased substantially, which was seen as very good for the market. We also saw new job openings slowed in US in October. And actually, this is seen as a relatively good thing in terms of the stock market, because the Federal Reserve are monitoring what happens with the job market, and there was a lot of record job openings previously, and that means that staff wages and rates increased quite significantly, and this did help to increase inflation overall, amongst many other things as well. So this was seen as relatively positive, and that those interest rate rises and other things that they put in place are starting to work. We also saw consumer spending increase by 0.8% in October, which is quite interesting because, as I've said in previous videos, we haven't seen a total a drop off in spending at all. But what we have seen is we've seen a drop off in savings. So consumers are spending a very similar amount. However, they are starting to save less money, which could have some negative effects later on in the future once that surplus is all used. We also saw OPEC Plus has agreed to stick to its existing policy of reducing oil production, and that is ahead of any Russia sanctions. So they are continuing to agree to, they're going to continue to reduce the oil production. And like it has been said, then there has been a lot of pressure for them to increase the production quota. However, they are not willing to do this at this current time. So that's keeping oil prices at a reasonably inflated level, albeit less than at its peak. We also saw inflation in the Eurozone. It slowed for the very first time in November, still very high, but that was the first time that it slowed, and it hasn't gone up for the last 17 months in a row, which was a record high in the previous month of 10.6%. So this is a positive sign. It doesn't necessarily mean that inflation has peaked, but it is a positive sign that inflation could start to be under control in the Eurozone. As I've said, I expected the Eurozone and the UK inflation to peak slightly later than the US, and that is because they were significantly slower in tightening measures of their economy. We also saw mortgage approvals in the UK fell more than expected in October. And this is the lowest level since the pandemic lockdown in June 2020. And this is mainly to do with the rates of mortgages increasing significantly, and this has stopped people from getting new mortgages and for moving to new properties, because the mortgage rates are very difficult to stomach, especially when you have a cost of living crisis. And I expect this to get significantly more difficult for UK citizens to afford these new mortgages over the next 6 months or so. However, this could have a positive effect on inflation. We also saw some really positive news, and Chinese stocks really bounced back the last week or so. And that is because China is starting to move closer to a full reopening of the economy after months of pandemic controls. And that's kind of on the back of a recent, the people have protested quite a lot in China over the last few weeks. There's been a lot of protests, especially in cities that have had a lot of lockdowns recently. And China seems to be caving into the pressure. And also it's having a very negative, these lockdowns are having a very negative effect on the economy and the growth rates. So this is seen as really good for the market, and we had a really strong bounce back in our Chinese stocks, especially those that are kind of COVID sensitive, and I will talk about those in the next slide. So as we move on to the top 3 performing stocks of last week, and the top performing stock of last week is Wynn Macau, and that was up a whopping 55.96%. And the reason why that was up so significantly is for 2 reasons. So one of them is that they actually renewed the license to be able to operate in Macau amongst many other casinos, and it had been thought that for a while that this might be quite difficult to renew this, especially with what's going on in China. However, it was renewed, and we saw a whopping rise in the stock price. The other thing as well is obviously the reopening of China's economy is very good for Wynn Macau, because that allows a lot of the Chinese tourists to be able to visit Wynn Macau without all the restrictions and having to segregate and having to, basically. The second best performing stock for last week is Haidilao. And Haidilao, again, is another Chinese stock. This is a hot pot chain of restaurants around China, but also internationally. And that has obviously suffered over the last year because of lockdowns, and it was very difficult for people to be able to go out in large groups of people to go and eat in hot pot restaurants, etc., which significantly slowed their growth. So these the relaxing of COVID-19 rules and regulations is going to be very good for Haidilao, and we saw a huge increase of 46.32% in Haidilao. The third best performing stock last week was Magnite, and that was up about 23.27%. So some good rises from our main stocks last week. As we move on to our Death by Charts edition, you will see to the left, I want to run through about the US unemployment rate. And as I said, that the record kind of low unemployment rate kind of at the beginning, and as we moved into the mid half of 2022 was at kind of historical lows. So employment was really high in the economy, and there was a lot of these job openings. And this meant that this had an effect on inflation because wages of staff went up and costs of goods, etc. And what we are starting to see now is we've kind of come off those historic lows, and now we're at about 3.7, but that is starting to increase slightly. And I think that that's starting to increase. If we look at kind of historical levels, I think the average is about kind of between 4 and 5%. So if that kind of clocks up, I think that that could be very good in terms of the Federal Reserve starting to not tighten as much in their monetary policy anymore, or even start to do monetary loosening. We also saw, if we look at the chart to the right, you will see the US M2 money supply. And this was an extremely interesting chart. And I just wanted to show this to you because, as you know, the US are renowned for printing lots of money into the economy. It's the way that they've managed the economy since the beginning of the kind of fiat monetary system. And as you all know, in 2020 and 2021, there was a lot of money printing because of the pandemic, and there was a lot of stimulus, etc. And the money printing went all the way up to about 20.2% in 2020. But what we have actually seen this year is an unprecedented shrink in the money supply. We're into the actual negatives. And this is actually the first time that this has actually happened since the beginning of records. So they obviously had to, after a massive increase in 2020, they had to try to tighten as much as possible to try and get rid of some of that inflation that had been caused by that money printing. So our third chart, which I thought was quite interesting, is the average home price. So as you all know, we've seen consecutive monthly increases, so 126 consecutive monthly increases in the prices of houses in the US, and there was such interest last year and in 2020 with increases in the house prices that it kind of got a little bit out of control. And accommodation makes up quite a large part of those of that inflation reading that we see when they release the CPI figures. And finally, over the last 3 months, we've seen 3 consecutive declines in the prices of houses, and that is mainly because of those increase in interest rates, which makes mortgage borrowing more expensive. So we're starting to see a drop off in the price, which I think is reasonably healthy for the economy in the long term, and it makes it more likely that the Fed can start to reduce the pace of those increases. As we move on now to the crypto news and views, I just wanted to explain a little bit about what's been happening in crypto. And we've seen Bitcoin bounce back to over $17,000. Obviously, over the last few weeks, there has been a lot of negativity in the market due to the FTX collapse, which happened about a month ago now. And we saw Bitcoin go to its lowest price in the year, down to about 15,500. So we have seen a nice little bounce back overall in the market. And there was a lot of worry about damage to the crypto ecosystem, and many companies might go under. Obviously, we did see some damage to BlockFi, for example, and there's also some concerns about the digital asset group as well. But it seems to be relatively contained at the moment. And I think the longer that goes on, I think the less damage that there will be to the market. And I think that we can recover from here. I do have a feeling that we have either hit the bottom, or we're at least very close to hitting the bottom in the crypto market. And we've gone over a year in this bear market now. And as we start to get closer to that halvening cycle, I think that we're going to start to move out of this range back to a kind of a wider ranging pattern. I'm thinking somewhere between kind of 25 to 40 over the next in 2023. But we'll check a lot of the data and see how that progresses. There was also various interviews this week with Sam Bankman-Fried, who came out of the shadows, and he joined lots of Twitter spaces. He's also been asked to testify to Congress on the 13th of December. I think that this date is unlikely. He said that he is willing to testify to Congress, but he wants to get more information in place. I don't know if that's just a delaying tactic, but he has agreed to do that. I found a lot of his interviews on Twitter Spaces and some other publications that he did interviews for. I found them a little bit disingenuous. Obviously, we know in hindsight what's actually happened with FTX, but he's kind of gone from 2022, 2021, him being a complete, seen in the media as a complete genius, an MIT graduate who's come out of nowhere to be a billionaire. And suddenly he's coming on these podcasts, coming on these Twitter spaces and saying, look, he knew absolutely nothing about what was happening at Alameda. He wasn't looking into risk management, and he was trying to come across like he was clueless about the whole situation, and that you should feel sorry for him because he didn't understand the positions that were in place by Alameda. And really what he's done is actually thrown Caroline, the CEO of Alameda, under the bus, because he's saying, like, what happened in Alameda, although it's his company, he wasn't aware of any of the information, and that they took undue risk. So I think it's interesting to watch that play out over the next couple of months. I think it's quite likely that he's going to end up in jail, and quite rightly so, because he put a lot of customers through a hell of a lot of pain. And I think although that this was extremely bad for the industry, I think that the more of these terrible actors that are, lose their reputation in the industry and are moved out of this industry, the better it is for the crypto moving forward. We've also seen Binance raise $1 billion in an industry recovery fund and they've actually said that they're willing to increase this to $2 billion if needs arise. And this is really to support industry and anyone that had significant positions in FTX or have been harmed by this downturn in the market because of it. I think that it's generally a good thing. I think the only thing you've got to be careful of is not promoting risky behavior and for these companies to think, well, it's easy to be bailed out. So I think as long as they go to reasonable causes, I think that is generally a good thing for the market. We've also seen Ripple file the final submission against the SEC. This is the final submission from the Ripple lawyers. I think it's looking quite positive, and we are expecting a decision. A court decision from the judge sometime in Q1 2023. So that long-awaited 2-year case is finally coming to a close. And I think if Ripple do win that case, I think it will generally be very good for the crypto community and regulations moving forward, because if they do get found guilty, it could be very negative for a lot of different altcoins and projects, because they could be classified as securities. So fingers crossed that they win that one. We also seen lots of layoffs from exchanges. I think that this is quite normal and actually quite good, because you want them to reduce the costs of business during the bear market, because their revenues are obviously suffering, and you want them to be sustainable in the long term. So Kraken has laid off 30% of his staff, and we've also seen other exchanges such as Gemini recently have reduced the staff base as well. So I think this is a normal part of the bear market. We also seen Telegram has announced plans to roll out a crypto DEX exchange. And I think that this has been touted mainly because of the troubles that we've had, obviously, in FTX. And there has been more of a driver to crypto DEXs, which are obviously decentralized by nature, and also to DeFi services. And we've seen a massive outflow as well of crypto from exchanges as people start to realize that they need to hold their own private keys. So this is a suggestion to all of you on this video. If you don't already, it's very good to have your crypto on a ledger or a Trezor or a cold wallet, which is not associated with the exchange, because on an exchange, you do not hold your private keys. So just one chart that I wanted to outline for the crypto market this week. And I see this as quite a positive. And I think that this could be a reason why we've had a nice little bounce back over the last week or so. And we did see last week, we did see stable coins moving into exchanges. And this is actually seen as a very good thing, because often traders and long-term crypto holders, they have stable coins during the bear market, and then they start to deploy these stable coins when crypto prices hit the lows in the bear market. And we have seen that. So we've seen an increase in those stable coins, which has then been obviously traded into other crypto coins and Bitcoin, etc., which has seen that kind of bounce back in the market slightly. So I'm generally positive about crypto in 2023. As I said, I don't expect it to go back to all-time highs in 2023. It's much more likely to happen after the Bitcoin halving. However, I do think that there is a lot of upside in 2023, even if we find a higher range. So I had been slowly increasing our positions, and I did increase our positions when Bitcoin hit that yearly low a few weeks ago, and I did add to our crypto positions as well. So thank you very much for listening to this video today, and don't forget to join the Discord group if you haven't already, and I look forward to speaking to you next week. Have a great week ahead.